The U.S. economy is the largest in the world, but that does not mean that it is always the fastest growing or the best investment location. Gross domestic product, or GDP, is a measure of how an economy is growing. Companies such as Honda Automobiles, Samsung Electronics, and LG Appliances are foreign companies. If you buy their products, then why not invest in them? Owning foreign investments can help your portfolio grow while reducing risks through diversification. Consider correlation statistics. If the prices of two stocks move perfectly together, they have a correlation of 1. In contrast, if the stocks move perfectly opposite from each other, then the correlation is -1. Mathematically, risk is reduced when a portfolio consists of assets that are not highly correlated. Generally, the price of stocks traded overseas has a low correlation with stock prices in the United States. Basically, U.S. and foreign stocks rarely move in the same direction over time. Now, there are some risks with foreign investments, and those risks include currency exchange rates. A simple currency exchange rule is that foreign stocks will generate a higher return for U.S. investors when the U.S. dollar declines in value against the stock's home currency. Another risk is different market operations. Rules, regulations, and protections of investors vary by region and country. Also, high trading costs. International markets generally are less liquid than the U.S. markets, which results in reduced investment marketability, which is a measure of how active and robust a market is for investments, and consequently, that makes the cost higher to buy and sell. There's also less regulatory oversight, so a buyer beware attitude persists in many emerging markets. And then there's country risk. Events like war, insurrection, sanctions, and expropriation can significantly increase risks and trading costs. Because of the difficulty of buying foreign investments directly, nearly all Americans gain access to these assets by buying either a mutual fund, an exchange-traded fund, or ETF, or an American Depositary Receipt, or ADR, which represents one or more shares of a foreign stock. Now, there are different types of international investments, and they include global funds, which invest in foreign companies as well as U.S. firms, international funds that only invest outside the United States, regional funds that invest in specific areas such as Europe or Asia, and country funds that invest in specific countries like China.